Welcome back to the Lunch Mode Project, a channel where we research stocks, learn about companies, and we do a lot of other things as well, but the main focus is researching stocks. And let's see, who do I have in mind today? Hmm, I tell you, Robinhood. We're going to research Robinhood, ticker symbol Hood, Hood. Okay, I want to know what's going on with that company. I hear about it a whole lot. They market a whole lot as well, and I'm like, you know what? Let me go ahead and do some research on Robinhood. And guess what? I want you here with me doing the research. This is a beginner friendly platform and it's designed for that, okay, for beginners. I'm not going to be talking big words. I talk big noise, but we're not talking big words over here or anything like that. We're basically just learning together, conducting the research, all of those good things. Now, I have already done some research on Robinhood, okay? Just so I can know what's going on with you and so I can share what I have found with you. And don't worry, I'm going to take you along. I'm going to try to make sure that the video is not too long. That's why I went ahead and did the majority of the research on it. But I'm going to show you where I got the information from. So that's the main thing. Again, beginner friendly. It's not enough to talk about a company, but okay, Charity is my name, by the way. Where did you find this information? And I'm going to show that to you. Now, I have built me a slide deck as well so that I know what I should be looking for in a company, and I will show that to you as well. So, hey, let's get into it. So I do have two screens up here. Before I say that, I have two screens up here, so I will be going back and forth looking at my notes because you know what? I'm not memorizing nothing. I'm going to read exactly what I have written down to help me along. Now, let me preface this video by saying I am not a financial expert. I'm telling you that now. I'm not a financial expert. I'm not a financial advisor. I just like researching stocks and I want to show you how I do it. People do it differently and that's on them. That's fine. This is how I research stocks and how I interpret my findings. So if you're ready for that, then I suggest that hey, you stay along, grab some paper or type it up, whatever you're going to end up doing, so we can follow along, so we can learn how to research these stocks together. Without further ado, I am going to, which one I'm going to do first? So I'm going to share my screen so you can see everything that I have and what we will be looking at. So let me share my screen. And here I am, still up here, right? All right, so I'm sharing my screen right now. So I already have it on the Robinhood website, and we'll navigate through it so we can know, okay, where to find the information that we're going to be discussing. I also have Trading View up here as well. I love Trading View. I love this platform. This right here is going to help us find our metrics, do our evaluations on the company, basically look at their numbers, okay? That's where we're going to get this information from. There are other platforms that we can get the information from as well, but we may use that as well, but I also love using TradingView, okay? Now this right here is showing this presentation, and I have a whole lot more, but I condensed this down to show how are we going to do the research, what are we going to be looking for. So it's already broken down already. And then here's what I have right here. This is my notes that I've already did some research on, okay? This is my notes I've done research on, and that's where we're going to do. That's what I'm going to present to you, okay? So, and I'm going to be reading from my notes, just so you know. So let me actually, I'm going to move this. Let me go back to camera. Go back to my lovely face. Hi. And I'm going to move you over here because you're in my way. And I'm hoping that the computer doesn't slow down because a lot of times I have a lot of things open, it may slow down. So I hope there's not a lag in here at all. Let's hope not. But anyway, so let's get started. So again, we're doing research on Robinhood, and here's what we're going to look at. All right, so let me go here. All right, so we're going to understand the company at a glance. We're going to look at the industry, the sector basis, what the company does, how the company makes money, which is very important, who they serve, who are their competitors and any and everything else so we can get a solid foundation so we can make a decision if we would invest in Robinhood or if we would not invest in Robinhood, okay? And I just realized I didn't share that screen with you. So let me move this again, because now I can't see my, all right, here we go. Sorry about that. But like I said, we're going to understand the company at a glance, and we're going to look at all of these here. I just discussed these, and we're going to go through it. So I'm going to go to the next slide, right? All right, so we're going to look at the institutional ownership, show if big investors like banks and funds believe in the company, things like that. The employee sentiment, is the company making real money, the net income, the earnings per share, profit margin, return on equity, and so much more. Please do not worry. Do not worry. I have broken it down to make it as simple as possible, okay? So don't worry about that. All right, so let's start with the basics. Let's see what Robinhood actually does. So again, we're on TradingView now. We're going to the About section. So Robinhood Markets is a financial services platform which engages in the provision of retail brokerage and offers trading in U.S. listed stocks and exchange traded funds, related options, and cryptocurrency trading, as well as cash management, which includes debit card services. All right, so for the beginner, what exactly does that mean? I want to look at my notes and how I broke that down. And here's what it means. So basically, Robinhood is a fintech brokerage. They let people buy stocks, ETFs, options, crypto, and now they're expanding into banking and retirement accounts. All right. So the business model is simple. They're a digital platform that makes trading and money management accessible, especially for the younger generation. With that being said, Robinhood is geared towards more of the younger crowd and beginner investors, beginner traders, and whatnot. However, they do not discriminate. Anyone can use the platform, but again, Robinhood is more so geared towards the younger folks. Now, I still consider myself young, so they geared towards me as well. Okay. All right. Now, with that being said, let's go to our research presentation. Actually, no, I don't want to do that first. So, again, if Robinhood is a fintech brokerage, means it falls under finance, kind of like a bank, but it's not a bank, and it falls under technology as well. So that's where we get the fintech from. So, who would their competitors be? Who do we have out here? You may have heard of SoFi. Let me go back to camera mode. You may have heard of SoFi. That's a online banking institution. The main ones people have heard of is Fidelity, Charles Schwab, Vanguard, Webull. Those are Robinhood's competitors, and which lets you know this space right here is definitely a crowded space, and it's definitely competition. But we have to see if Robinhood can stand up against them. Okay. So yeah, that's what it is. All right, so let's go to, let's see, what do I want to go to now? All right, so we want to look and see, how does Robinhood make their revenue? How do they make sales? Okay, so a good thing to do is to go to Robinhood's actual site. So I'm going to go to their site and put it back on. All right, so now I'm on Robinhood's site. Again, Robinhood.com. The best thing to do is look at what we offer. If I click down, you'll see everything that Robinhood offers, right? Now, they may offer a lot, but are they actually making revenue? Are they actually making sales off of what they offer? So we can see they offer investing, retirement, trading options, stock options, trading futures, trading in general, banking, credit cards, social, and ventures, and we're going to break those down just a little bit. I don't want to get too deep into it, but that's what they offer. Again, I've done my research already, And I'm going to go back to my notes I have over here. So Robinhood, they do make four main revenue streams. Basically, they get paid when users place trades using their platform. They have interest on customer cash and their margin. They have Robinhood Gold subscriptions, and we're gonna talk a little about that too. I'm like, what? Wait a minute. And they also have crypto trading spread. So again, you're able to trade crypto and on this platform. Again, they have their Robinhood Gold subscriptions. Why am I getting tongue tied all of a sudden? They have their Robinhood Gold subscriptions, and it's only offered to those members, right? And again, interest on customer cash and margin, and they get paid when users place trades. So if I go through here real quick, let me click on invest. So again, you can trade on your time. They have 24/7 support, no commission fees on stocks, ETFs, and their options, right? I'm scroll down real fast, and we'll scroll back up. Again, what do they offer? They will be offering retirement. They can drive your IRA with a gold boost. So these are things people can look forward to. And I see they have a 3% IRA match and a 2% transfer boost as well. For those, I'm going to have to look into that some more now. Hold up. Okay. What else we have here? Again, they offer options trading if you're into trading. We're not going to get into that because we're not doing all that. But they do offer trading on their platform if you're into that. And then banking. They have private banking unlocked, right? So it's no longer reserved for the ultra wealthy. They get a 3.5% savings APY. They offer estate planning, professional tax advice. Again, we still have to see, are they making money off that? Okay, credit card. They have a Robinhood Gold card. You get 3% cash back across the board. And that's enticing right there. So you earn 3% cash back on all categories. And the benefits of that, they offer travel perks. So that's real great news right there. Let's go to social. All right, they have Robinhood Social, basically where traders or investors, they can talk back and forth with each other, show their gains, show their charts, different things like that. So for people who love trading, that is a great tool right there for them to use. And they also offer Robinhood Ventures, which you're able to invest into private companies. That's normally not even allowed for retail investors. And retail investors are people like us, like normal people, buyers and things like that. Okay, so that's what they have to offer. Now, I'm going to go to. We've already talked about who they serve and their competitors already. Again, we've already said they're more geared toward the younger crowd, but anyone can use the platform, okay? Now, let's talk about institutional ownership and how employees feel about the CEO. Now, normally this is where I go. Well, let me go to the presentation first. Let's do that first. And go to the screen again. All right, so institutional ownership, what are we looking for? All right, so it shows if big investors believe in the company. Now, it's a quick way to see if big investors believe in the company. And the rule of thumb for that is they show strong confidence if it's anything over 50%. And anything under 20% is risky, right? So, again, the institutional ownership is percentage of shares held by big investors, like the people with the money, put it that way, okay? And we're also, again, going to look at the employee sentiment. How do the employees approve of the leadership? So if employees are unhappy, the business may be unstable behind the scenes. We're looking for a 60% or plus approval rating, which means it's a healthy culture, or a below 50% for internal problems. Now, here's what I normally do to find this information. I would normally go to Yahoo Finance. I go to Yahoo Finance and I go to Glassdoor. Let's go to Yahoo Finance. And then I go to the search engine. I either type in Robinhood or I type in the ticker symbol or the nickname for Robinhood, which is Hood. And you see it'll pop up here. I go ahead and click on it. And once it populates, you will see that it's a good way to find out who are the institutional holders of Robinhood, right? Basically, who's backing Robinhood. So let's go to holders. I sing a little bit, just so y'all know. All right, so if we go down, you see the percentage of shares held by institutions is 74.78%. Now that's pretty cool, right? Because we also said what? That institutional ownership, anything over 50% equals strong confidence. So we know that the sentiment for Robinhood is over 70%. So that's strong confidence. So I want to close out Yahoo Finance. I'm actually going to go ahead and type in Glassdoor. This is another website that I normally go to find out how the employees feel about the leadership, and specifically about that CEO. Once it pops up, there we go. I'm going to hit search. Let's go. All right, I had to hit search again. Okay. This time I'm going to type in Robinhood. Robinhood. Wait for it to populate. We're going to choose the first one, Robinhood. Oh, no, the second one, Robinhood. It's their logo right here, Robinhood. Make sure I choose the correct one. All right, then we're going to scroll down a little bit. So Robinhood, you have 79% of its employees approve of the CEO. And what did we say about the employee? Employee sentiment, anything 60% plus or over is a healthy culture. So we can deduce to say that they like their CEO. Okay? So now I'm going to close out on this one, because I don't like having everything open up. Like, oh my goodness. All right, and I'm going to close out on this one as well. All right, so we now have the institutional ownership, and we now have employee sentiment, and both of those were green. So that's a great thing. All right, so now what are we going to talk about now? Let's go over. Now we're going to see if the company is making real money. We'll look at how much profit it earns and how much it keeps and how much it makes per share. All right, so we want to look at the net income first. Normally, here's what I do. I would go back to TradingView. Now, I could have used Yahoo Finance, but I like TradingView platform better. So I'm already on Hood right now, or Robinhood. So what I'm going to do now, I'm going to go to Statements. All right. So now I'm on Statements. So we're going to go down to make sure we're on Annual. Let's make sure we're on Annual. Well, let's go to Income Statement first, because it's going to change it anyway. We're on Income Statement, then we're going to go to Annual. All right, so we're going to look at their net income. All right, rule of thumb that I want to tell you now, because we're not going to get too deep into their financials, the metrics, and whatnot, especially on a beginner-friendly level. The only thing that we really want to see with everything is it going up? Is profits going up? Is revenue going up? Is revenue going down? Or is revenue is not really moving, or not just revenue, income, whatever the case may be. Basically, is it going up? Is it going down? Is the company making money? Is the company not making money? What's going on with it, okay? So we're going to try to to get through it a whole lot faster. So I'm going to go back to the screen now. And again, we're going to look at the net income. Scroll down some. Net income is right here at the bottom here. Net income, we're going to go all the way over, and let me go back up to make sure we're on annual. Okay. We want to look at the annual, because your annual tells you the bigger picture, okay? So net income. You can see from net income that since 2024, it's been steadily climbing up, and they're in the green right now. They're actually at 1.88 billion right now. So we're going to give net income a green. Okay. Then we're going to go to who we're going to go to next. Let's look at their earnings per share. So the earnings per share, or EPS, it measures how much profit a company makes for each share of stock. Now here's why it matters, because it shows how profitable a company is. The more positive quarters or the more positive years they have, it equals more confidence. So let's go back to TradingView, and we're going to go down to the earnings per share. We're going to look at the diluted earnings per share. Diluted means everything thrown at you, so we can see a real number, okay? So with that being said, again, we can see that they have been profitable and going up since 2023, right? They are currently at 2.06. 2024, it was at 1.56, then 2.05 in 2025, and we're just now getting into the new year now. For the most part, it's February, but it's 2.06. So they have been profitable with their earnings per share. All right. Who are we going to go to next? Let's go. All right, we're going to look at the profit margin. Now, with the profit margin, you're not going to see that on TradingView or any of the other platform. That is one that you would have to calculate in order to get that margin. Okay. So the profit margin, that's your net income divided by the revenue times 100. Net income divided by revenue. So with that one, we're going to go back to our friend TradingView. We're going to take our net income, which is 1.88 billion. I'm actually going to use my calculator this time. I don't use my calculator on my phone, but I'm going to use it for these purposes now as well. So we're going to take, and by the way, there's not a lot of math that you have to worry about when we're doing this, okay? So this is just one of those things right here, like, I gotta do the math on it, right? As a matter of fact, yeah, I'm doing the math on it. So I already pulled it up. We're going to go ahead and do the math on it. So again, net income 1.88. So 1.88. And we're going to divide that by the revenue. Scroll up. Total revenue, go over 4.50. So divided by 4.50. So we got 0.41, which we can multiply that by 100. So we know it's going to end up being 42%. So 41.7, that's basically 42%. Let me close that. So profit margin rose by 42%. That's a good number right there, and like within 1 year. That's real good, okay? So next, we're going to go to, who we're going to look at next? We're going to look at return on equity. So I'm going to be honest with y'all. I almost said it's return on equity, or ROE, but I almost said rules of engagement. I used to be in the military. And anytime I see ROE, first thing that pops in my head is rules of engagement. So if I mess around and mention return on equity again, but still say rules of engagement, I really mean return on equity, y'all. Okay? But I'm trying to make sure I'm saying return on equity, ROE. But anyway, let me get back to the screen. All right. So return on equity, or ROE, is how well the company uses investor money, our money that we're going to invest, to make profit. How much profit do they make for every $1 of investor money? All right. So it's important because a high ROE means the company is efficient and potentially a strong long-term investment. So we do have rule of thumb: 15% is efficient, 10 to 15% is decent, and under 10%, hey, that's kind of weak or inefficient. We have to kind of like look at y'all like, wait a minute, if I invest my money, y'all know how to make no profit. But anyway, so we're going to look at that. So we're going to go back to TradingView. Again, so TradingView, we're going to look at the, I would say rules of engagement again. Oh my goodness. Return on equity, right? So this one, we're going to go to statistics, okay? And then we're going to scroll down and look for return on equity. And here we are right here. Let's scroll back up, make sure that we are on year. See, it's on quarterly. I gotta keep changing it. All right. Make sure we're on annual, okay? That's important. So again, return on equity, ROE. Right now it's at 22.01. And if you look at their pattern, it's actually been getting better and better each year. So they're at 22.01 right now on return on equity. Go back to our presentation. All right, again, anything 15% and plus is efficient. So they are efficient for their return on equity. Basically, the money that we're using, they're able to make it, that we're investing into the company, they're able to make a profit. So that's good right there. All right, so then we're going to go to the next one. Is the return on invested capital. That's basically how well the company turns all invested money, like the debt, the equity, into profit, right? So it's basically a deeper look at how efficient the company is. Let's go to ROIC. Let's go back to Trading View. We're going to go down to return on invested capital, and we're at 21%, 21.62%, 21%. And you can see again where through the previous years they have been actually increasing and getting better with that. So that's a green for us. That's a good thing. Okay. Now, what we're going to do now is we're going to look at their cash flow. I'm not gonna worry about that right now. So it's the company generating real cash, okay? Let's look at their operating cash flow. So the operating cash flow is the cash the business brings in from its normal day-to-day operation. All right, so it's a sign of real strength if they're bringing in operating cash flow. All right, so a positive OCF, operating cash flow, is good. A growing OCF is great. A negative OCF, we're going to proceed with caution. So let's look at their operating cash flow. Again, let's go back to Trading View. This time we're going to go back up to statements. And then we're going to go to cash flow. We're talking about cash, operating cash flow. So we're going to get the cash from operating activities, okay? So we're going to go over, we're on quarterly. Let's make sure we're back on annual for this one. No. My apologies. Keep it on quarterly because annual, again, that's the big picture, but quarterly, what's going on right now with cash? Y'all got cash, right? So keep it on quarterly, make sure it's on there. Okay. So anyway, again, cash from operating activities. Right now they're at a negative. They're in a negative right now, negative 3.37 billion for that. Okay. Let's hold that thought, keep that in mind, regardless they're in a negative. Go back to our presentation. And let's go over to the free cash flow. The free cash flow is going to show how much cash the company has left after operations. So, why it matters? Because it's the money a company can use to grow, to pay dividends, and or reduce their debt. Okay, so having free cash flow is important. So let's go back to Trading View. This time we're going to scroll down to free cash flow. Where's it at? There we go. Free cash flow. Free cash flow right now, they are negative 3.42 in negative 3.42 billion in the hole right now. So a lot of times when let's go back to me. Hi, I'm back. So a lot of times when you look at the free cash flow, and it depends on the type of company that it is, you want, for the most part, you do want all companies to have free cash flow, again, because they're able to grow, use that for marketing, do all kinds of things with that free money they have, free money they have lying around, put it that way, that they have, right? But some companies, depends on what they are doing, what their strategy is. That can be a good thing or it can be a bad thing. And we are going to, once we finish looking at the valuations and the metrics, we're going to see, okay, we see all these numbers, but what do the numbers actually mean? What did you do with the money? All these things like that. What do you plan on doing? So we are going to look at that. We see that it is in the negative. Why is it in the negative? So keep that in mind. So right now, when it comes to operating cash flow and free cash flow, we see that they are in the negative, okay? So I'm going to go back to, let's go back to the screen. And what I want to do now, actually, I'm not going to do that now. Here's what I'm going to do. I'm going to actually go through all of the metrics. because I like going through all. So normally I would go ahead straight to the shareholders letter, but I'm not going to do that. I'm going to go ahead and go back through all of their metrics. When I say metrics, all of their numbers, right? So I want to go ahead and look at their debt to equity ratio, okay? So let's look at their DE ratio. And okay, so a ratio, it compares borrowed money to what the company actually owns. So is the company relying too much on debt to stay afloat? All right. So basically, the ratio shows how much debt the company is using to fund its operations. So anything under 0.5 is safe. Anything between 0.5 to 0.9, it's balanced but reckless. But over 1, it's risky for beginners. Okay. Now, everybody's risk tolerance is different. So, it may be risky for someone else. Someone else may say it ain't risky for me. So it just depends. Also, with the DE ratio, well, actually, I'll get to that one later. But let's look at their DE ratio. All right. So now we're going to go to, again, statistics. And we're going to look at their DE ratio. And that is your debt to equity. Where are you, DE? There we go. So your debt to equity ratio. Now I want to make sure that I am on the correct one here. So let's make sure we're on the quarterly. I'll have to keep double checking that. Yep, we're on quarterly. Okay. So DE ratio, debt to equity, right now it's at a 1.71 for the debt to equity. Okay. Let's go back to our presentation. What did we say about the debt to equity? So anything under 0.5 is safe. Anything between 0.5 and 0.9 is balanced. Anything over 1 is risky for beginners. They're over 1 right now, so it's kind of risky right now. So I'm just going to write that down so that I do not forget that I want to come back and look at the DE, debt to equity, and then make sure I write down again, because we're going to take a look at the free cash flow and their operating cash flow to see why they're in the negative, and to see why the debt to equity right now is over 1. Why is it risky? Okay. All right. Who do we have next? Who do we have, baby? All right. Now, current ratio. I would tell you now, for banks, that current ratio is not a big deal when it comes to banks. So, current ratio, it basically shows whether the company can pay its short-term bills with its short-term assets. Considering now, I did say banks because technically, even though Robinhood is a fintech, they do kind of operate like a bank to an extent, and they do rely on customers' money, customers' cash flow to operate for the most part. So that's why like assets and liabilities is not going to be a big deal when it comes to the current ratio. For Robinhood, okay? I want to make sure that I went through all these, that we talked about all of these. Again, we'll look at the shareholders letter in a second. Right now, we're going to look at the revenue growth. All right, so revenue growth, it shows if the company is making more money year after year. Basically, our sales going up each year. So rising revenue means the company is selling more. It's a sign of demand and momentum. All right. Again, with revenue growth, we're not going to see an actual thing that says revenue growth. That's one thing that has to be calculated, right? And I can tell you now, off bat, when we already seen what the earnings and everything was, we already seen that it was positive, going up. That means 9 times out of 10, the revenue growth is going to go up as well. But we're still going to take a look at it, okay? So the rule of thumb right there, you want to see positive growth for at least 3 years, or flat or declining for 1 year. So what you can do a quick math on that. We can take this year's revenue minus last year's revenue, okay, and then divide it by last year's revenue. So again, we can go back to trading view, go back up to revenue. Let's go to statements, and let's make sure we're on annual. Okay, and income statement, annual. Okay. All right, total revenue, we had 4.50. So this year's 4.50 minus last year's. Now, it's just now 2026 February. So I may have to do, what we'll do for this one, we'll use 2024 that revenue right there. So we'll say this year's revenue, let's say 2025 right now, because that was the last time that they actually reported, okay? So they just reported also again for the quarterly right now, but again, we're trying to look at the overall picture. Let's look at 4.50 billion. So let's take my calculator out, and we'll do 4.50. And we're going to subtract that from the one we had for 2024, 2.98 billion, 2.98, and we get 1.52. We're still going to subtract that again. No, I'm sorry, not subtract. No, listen to me on that one. Divide that. We're going to divide that by the 2024 as well, which is again 2.98. So 2.98. And we got 0.51. Let's times that by 100. All right, it's over 50% right now. So revenue has definitely been growing, and again, you can again look at total revenue anyway, besides even having to calculate like I just mentioned, and you can see where revenue has been going up and up and up for a few years now. So they're definitely good from on that end there. Let's go back to the revenue growth. And then we had earnings growth, so how much a company's profit increases yearly. So you take beginner translation, it shows whether the company is making more money, the same money, or less money than before. Let me go back for 1 second. I think I messed something up. Oh, I did that. Okay, it's fine. All right, so earnings growth, how much a company's profit increases yearly. It shows whether the company is making more money, the same money, or less money than before. Growing earnings show the company is becoming more profitable. So it's a key driver to determine the stock price. So this one right here, we're going to take this year's EPS minus last year's EPS, and then divide it by last year's EPS. All right. So let's go to the EPS, which is our earnings per share. Let's go back to scroll down. And again, we're going to look at the diluted earnings per share. So we're going to look at 2.06. I see they've already reported that one. So we can do 2.06 minus 2.05. Again, just take the calculator. Let's do 2.06. Oops. Backspace. We do 2.06 minus, I prefer to do, it don't matter. We can do 2.06 minus 2.05. 2.05. All right, and then we subtract that again from last year's, which was again, I want to get myself confused here. Earnings per share, where did we go? Okay, good Lord. 2.05. Divide that by 2.05. Oh, 0.048. So that's kind of low right there. But again, when you look at the earnings per share, you can see where they have been going up. Now, considering that we just, they had just reported this, I want to look at 2.05. Let's do that one. 2.05. What's going on today, Charity? 2.05. Let me slow down. And we're going to subtract that from, let's do 1.56. 0.49. And then divide that by 1.56 as well. And we get a 0.31. So basically about roughly 31, I would say. So either way, we can see that the earnings growth, it has been growing. So again, the main thing you want to see that it's green and that it's not negative, and that it has been consecutive, and we can see that it has been consecutive. Okay, so that is a great thing for Robinhood at the moment. All right, so let's go back to our presentation and see where we are now. I want to make sure that I hit every metrics that we looked at. All right, so let's look at the PE ratio. Your PE ratio is your price to earnings. It's comparing a company's stock price to its earnings per share. So it's basically a quick way to see how expensive a stock is compared to how much money the company actually earns. So PE helps you judge if a stock is expensive or cheap compared to its earnings. This is one that we do not have to calculate. Let's go to back to trading view, and we're going to go to statistics, and we're going to go to price to earnings ratio. We want to make sure this time we're on quarterly. Okay, we're going to look at the current column. Price to earnings ratio. It's 36.53. So that's actually a good number. However, you can see where previously where the price to earnings ratio it was higher, then it actually went lower. So it was actually doing pretty good. Then it went lower. Then don't get me wrong. Now most times, most people you do want to see a lower price when it comes to, especially want to invest into that stock and everything. So I kind of want to see why did it drop? Like why did the price to the earnings drop? Okay, but it's not, again, when you look at it, it's not necessarily a bad thing. All right, let's go back to presentation, and we're going to look at what next. We're going to look at the PEG ratio. So that's the ratio compares the stock price to how fast the company's earnings are growing. Now, most times when you see the PEG ratio, it is based on 5 years of data. And considering Robinhood, they've been around for a little bit. They're still kind of new. We may not get a lot of information on their PEG ratio. Now, what I tend to do is I tend to go to Yahoo Finance and look for this information because I would not see it outright on TradingView. So let's go to Yahoo Finance right quick. I'm gonna go back to, I hope it's not a lag. I can tell it's going short. Let me close that one out because the more things I have open. All right, so again, we're gonna type in Robinhood. I'm just using the ticker symbol HOOD. Y'all love the background music? All right, let me stop. All right, it is going slow right now. Let's go PEG ratio. Let's go Yahoo Finance. Well, on another note, Supreme Court strikes down Trump's most sweeping tariffs. That's what it said. What is going on? They got to type it in again. It's going real slow. All right. Let me try to click on it again before it go crazy. All right, so I'm going to go to statistics. Now that it populated. And we're going to see, do we see anything on PEG growth? We see PEG ratio again. There's nothing here. So we're not going to worry about the price to earnings growth. However, and I'm going to close this out now. Again, normally if you take your PEG ratio, you'll take the PE ratio and divide that by the earnings growth rate. So we're not going to do that. However, we do know that Robinhood itself, that the earnings, it has been growing anyway. The revenue has been growing. When it comes to the price, we can see the price was growing, but they also dropped that price, the stock price down as well, okay? So either way, that's still a good thing. Now again, we're going to still have to see what actually happened. It's easy to get the numbers, but the numbers, they help you, but you still want to get an overall picture of the what and why and what's going to happen in the future, okay? I do believe at this point, I'm maybe missing one more. All right, so we got the price to book ratio. All right, so your PB ratio, it compares a company's market value to its book value. How much are investors paying for each dollar of the company's net assets after paying bills? So a high PB might mean investors expect big growth or that the stock is overhyped. So a PB under 1 to 2 is undervalued. Anything between 2 and 4 is balanced. And anything over 4 is potentially overpriced. So let's go back to TradingView and look for their price to book sales. We're already on the same screen. Where's the PB? Okay, there we go. Price to book ratio. So price to book ratio is 7.46. Now, the price for the most part for that, it has been dropping some. So, okay. So, again, let's find out what that means. Right now, they're at 7.46. Let's go back to our research. So, anything PB over 4 is potentially overpriced. Okay, so now we want to find out why is it overpriced. So, let's want to write down the PB. And then when we go through the shareholders letter, or let me show you right quick. So when we go through the shareholders letter, and it's a lot of pages, so I've already broken some of it down. All right. Then we can see, okay, why is the price to book ratio? Why is it low? Why is the free cash flow? Excuse me. Sorry, why is the price to book ratio high? Why is the free cash flow and operating, operating cash flow? Why is that negative as well? And then also the debt to equity ratio. Why are we in a risky lane right now? Okay, and their explanation will help us determine and know the why to all of this. Now we should have go back to the screen. Price to sale ratio. That should be our last one. So price to sales ratio is how much investors pay, how much we pay for each dollar of the company sales. So are investors paying a fair price for the company sales, or is it overpriced? All right. So it's handy when earnings are inconsistent. Now we already know that, hey, their earnings is not inconsistent. Their earnings has been consistent and whatnot. But we're going to look at it, price to sales ratio. So go back to trading view. We're going to scroll down up. Okay, price to sales ratio right now, they are at 15.41 or 15. So again, what does it say? Back to the presentation. All right, anything above 10 is usually high growth tech or hype driven. We just said that, right? Did we just say that Robinhood is a fintech company? Which means we already know, like, tech companies are growth companies. And they're over 10 right now with their price to sales ratio. Again, because usually high growth tech or it's hype driven. You know, they did say or hype driven. Maybe people say, oh, shoot, Robinhood, it's driving up the price because people getting in, coming over to the company, investing into the company and whatnot. So, hey, we'll see. All right, so that being said, we got all of our metrics done. And I'm going to make sure, I got my little note right here, make sure I cover everything. And I did cover everything. So right now, for the most part, as I'm doing my research on this company and I'm seeing the numbers, for me, I'm seeing that Robinhood, they're doing pretty good, right? They have revenue growth, they got earnings growth. Like, come on now, that's what you want in a company and whatnot. Now, again, their free cash flow is kind of low right now. Their price to book ratio, that was kind of off right now. The debt to equity, that's risky, of course. But now we want to find out, okay, well, what happened? Like, what's going on, right? Whether it's good or bad. We don't know that, okay? So here's what we're going to do. Let me put it back on the screen. So what we're going to do now, we're going to go to, do I want to close this out? I want to make sure I want to close Trading View out right now. Right now, we're going to close. No, I'm going to leave it up. So, just in case. All right, so we're going to go back to the Robinhood's actual website. Let's go. All right. Now, here's what we're going to look for. We're going to look for the shareholders letter. Now, the shareholders letter, it would tell you everything that happened, like what went wrong, what's going right, and what do we plan on doing in the future, right? That's normally from the CEO. Now, sometimes some companies, they may not have a shareholders letter. That's when we have to use their presentations or their reports, like their 10K report, their 10Q report. Your 10K report, it basically shows everything over the big picture of what's going on with that company. Your 10Q report is only showing like, hey, here's what happened in the past 3 months, because quarterly, 3 months and everything. But that's where you would normally find information about what happened, why did it happen, what's happening now, and what are we planning on doing in the future. That right there can give you a whole snapshot of why we have the numbers that we have. And it also gives a sentiment on how buyers or sellers, mostly buyers, how they feel, or people that's invested into their company, how they feel about your future operations and everything. Because sometimes that can end up making investors pull out of the company, or not necessarily pull all the way out, but maybe sell some shares and everything, or maybe put more money into it because then they see, oh, we have a bigger outlook. Now, I'm going to preface all of this by saying I have already done the research on the company, okay? It was a lot. to go through and look at, but it was kind of fun. We're not going to do that here. I'm literally going to read to you everything that is going on with that company. So please bear with me. And that way we can know, all right, here's what happened. And it's too easy. But I'm going to show you, though. I'm going to show you what document that I actually looked at to find this information, okay? So with that being said, I'm going to go ahead and, matter of fact, I'm going to go ahead and close TradingView out right now, for right now. All right, so that being said, we're going to go back to the screen. Let me share the screen with you again. All right, so here's our screen here. Now, we're going to scroll down, right? Most websites you go to, if we're looking for anything when it comes to investors, it may be at the top or the information we need may be at the bottom. You're going to always see either investor or investor relations. So we're going to scroll down. So for Robinhood, theirs is at the bottom. And we're going to go to investor relations. So I'm going to click on that. All right, so now we're on investor relations. Now, excuse me. Now, investor relations, you see everything that pops up. You're going to get an overview, the press releases, events that's going on with Robinhood, their financials, which is the information that we want to get out of here as well. Because you see your annual reports, your SEC filings, your quarterly results. Like, we want to see results and everything, right? Information about the stocks and everything, like how much it is right now, currently, all things like that. And you can also just scroll down here, and you can get your information that you need as well. So what I ended up doing is I went down to their actual presentation. So basically, Robinhood, they just had their earnings. They had their Robinhood Q4 and their full year 2025 earnings on February 10th. Today is February 20th as we speak. So they've already let us know what's going on. Now, you can click on any of these to get the information, but I would rather click on the, what I ended up doing, I clicked on the presentation. I actually clicked on all of these, to be honest with you, but I'm going to click on presentation for right now. I don't know why it started at 52, but you see it's 54 pages right here. Now, this is their presentation. It's kind of in PowerPoint format. Now, unless you're just really, really savvy, who wants to look at it this way, okay? So that's one way but that you can get your information from. I'm going to click off of this one. And then we're going to go down to which one I want to look at. Do we want to look at the maybe live stream? Let's look at a live stream right quick. Let's see what we get for that one. Oh, we don't want live stream, y'all. Y'all hear that? I would dance to it, right? So pause. But I'm glad this popped up. So if you do a live stream, they basically, most companies, they, especially if you invest into those companies, they will, when they have their earnings, they do record it and they do screen it out. As you can see, they have it uploaded on YouTube on their earnings and everything. So you can actually listen to their earnings call on a lot of these platforms and whatnot. So, and I have listened to earnings call, which by the way, I will be doing that in the future as well. Listen to some of it, but that's not the one that I want right now. But do know that you can always listen to the company's earnings calls on the same day that they're reporting earnings, so you can listen to everything live. Okay, I'm gonna close that back out. I'm trying to find the one that I actually looked at. It really wasn't the so let me just go back up here. That's not the one I looked at. I know it's not. Let's see. Okay, so the one I ended up looking at was the earnings transcript. So we're going to click on transcript. So that way I can see word for word myself everything that went on. Now this one has 20, let me go back out just a little bit. You can see this has 26 pages. Yeah, do you know I actually read this. I actually went through 26 pages and found this information. You see all of this. So this is basically them letting us know what are they planning on doing, what happened, their future, everything I just explained to you, right? It's all this information in here, okay? So again, I read through it and I went through and picked out my points, and I'm going to actually read those to you, okay? So that being said, let me move this one out of the way because you are in my way. All right. So again, I'm looking over this screen right here. I can look at me and just listen to me. All right. So here's what management is saying. So basically, they had massive revenue and they had ARPU growth. And I had to look that up at first. When I saw that, I was like, "What's ARPU?" All right, ARPU is average revenue per user. Average revenue per user. So it's basically bringing in more money than before. So meaning investors like us, because I'm investing into Robinhood and I'm using their platforms, using their different products and everything. Now I'm bringing in more money for Robinhood. So that's really what the ARPU is, the average revenue per user, right? Again, they had massive revenue. We saw that their revenue was like, it's up, baby, right? So it's like, okay, well, what are they doing exactly, okay? So then they basically got a lot of new products. We mentioned retirement. They're doing credit cards. They have prediction markets. Again, I had to find out prediction market. And it's like, I thought about FanDuel, but it is like a form of betting. But what they're doing for the prediction markets, they're basically saying that, hey, we see this right here happening, and they're allowing investors to basically buy contracts and make bets on what's going to happen, whether it's in the football world. I can think of any others right now, but it could be non-sports, like Super Bowl. Hey, we think this team right here is going to win. We think this team right here is going to a Super Bowl. Things like that. So they have introduced what they call prediction markets and whatnot, okay? So I thought that was like, pretty cool right there. And then they say their big focus is on profitability and operating leverage, meaning that they want to bring more products to the customers, enhance their user interface for their apps and everything. So there's a lot of things that they're doing for this. Give me 1 second. So they basically want to be like Robinhood they want to be that guy, that man, that woman, whatever you want to say. So they have a 3-part strategy. They have they want to be number one for active traders. They want to be number one in wallet share, and they want to be number one in the global financial ecosystem. So they're basically expanding into, again, banking, credit cards, retirement. I just mentioned prediction markets, AI tools. A lot of companies now, we all know AI, that's a thing now as well. So they're investing more into AI as well. They're doing social trading. They're even doing, again, crypto, and they're expanding into international markets right now. As a matter of fact, because Robinhood is U.S. based out in California, now they're also expanding into Europe or the European Union and whatnot. And they're also expanding also now into Indonesia as well. So they didn't give too much information on when they're going to start certain things and everything, but they are making an aggressive approach. Let me go back to myself. As a matter of fact, where am I? There I am. But they are making an aggressive. I said invested. I need to invest, huh? An aggressive approach, aggressive marketing approach to get more customers, to come in and everything. So they're dropping the price as well of their stocks and everything in order to entice, shall I say, more people to come onto that platform and everything. So that's good. So that's one thing. One way you can look at why they may not have a lot of free cash flow, because because again, they are trying to advance they're marketing heavy right now, and they're just enhancing the products they already have and introducing more products for their customers and everything. So I can understand why the free cash flow is, it's pretty much like that. Okay. Let me see something right here. So, excuse me. So what I want to do, I'm gonna go back to the presentation right quick, and Let me share the screen for this one as well. So let me go, keep going, keep going, keep going. All right, so here's what we're going to do. We want you to make a final decision, right? So now it's time to ask 3 simple questions, asking more of the questions, so you know, and decide if the company belongs on our watch list or on my watch list. It may not belong on your watch list. I don't know. So here's what I invest in this company. So we're going to use this checklist after we do the research, because we already have, to make a confident decision. So again, do I understand the business? Yes, I do, because it is a fintech business that's built more so for younger investors. They're offering crypto, they're offering investing, retirement, banking. They're offering a lot of different things right now. So we do understand the business. Is it profitable? Y'all think it's profitable? Yes, it is. We've already determined that, okay? Is it growing? Come on now. They are growing and they're expanding, okay? Is it financially safe? I would say that it is financially safe. Yes, there are a little risks because for the most part, yes, they're getting in revenue. They got earnings. They're getting in more customers by the day and everything. Again, revenue has increased tremendously. Income, profit, that has increased tremendously. Customers have increased tremendously. However, the downside to that is what some may consider a downside that you have to be looking to. Again, they're doing crypto, right? So crypto is has a lot of volatility attached to it right now and everything. So, but the good thing is, it's just that's a part, that's one stream of revenue, right? So that's a risk right there. And then again, they're aggressively expanding, aggressively doing more research, doing more products, enhancing products, and all these things right here that does take money to do. But they're pretty adamant, and they know, like, hey, we see what's been working for us, as we all saw, it's been working for them, that we're going to stick to our plan, and we're going to do everything as much as possible in a timely manner, and just to be more efficient, okay? So that right there could scare some people, because hey, they could be doing this, going aggressive a little bit too much right now, right? And too fast. But for the most part, hey, it's cool, because again, it's the price fair. Yes, the price is fair right now because hey, they're trying to grow. It's a growth company. A lot of people believe in the company right now. So that's why, again, you have a lot of customers and everything that's even transferring over from other brokerages to even come to Robinhood and everything. So right now, in my opinion, the price is fair. Again, it's a sentiment positive. We saw sentiment was positive from customers and from employees and whatnot, right? So, and again, you saw it was over 70% for institutional holders with Robinhood. So a lot of people do have confidence in the company. Would I hold this for 3 to 5 years? Yes, I personally, that's just me, based on what I've seen, I would hold it for 3 to 5 years. Okay, um, why not? Right? I have not seen anything that where I would say that will give me a reason not to invest into this company, because they're promising a lot of things, and based on what I've seen so far and what we have researched, then it looks pretty good to me. I know there are other things that we can really really go deep on, but just from a beginner side for right now, we're going to keep it at this. And I personally, for me, I don't know about y'all, I will hold it for 3 to 5 years. Now, again, am I buying the business and not the hype? I say this every time. If I did not do my research, like we just did, if I did not do my research, I would be buying the hype. Because remember when I first got on here, I said, well, I keep hearing about Robinhood, they're doing this, they're doing this, they're doing that. And then I did my research, I can see, okay, why this happened and what's going on right now and what y'all plan on doing in the future and stuff. That way I can make an informed decision. So, hey, again, would I invest in this company based on what I have seen? Yes, I would. Now, do I want to right now? I don't. I'm gonna be honest with you again, but it is definitely something on my watch list, right? Because I have other investments in other companies that I'm already in, or that I may want to do research on as well. But if I should ever change my mind, come on now, I most definitely am going to keep Robinhood, you know, in my brain, right? But I also consider now, um, things change because something could happen with Robinhood, right? And you never know. So you always have to constantly like do your research on any company that you want to invest in. Like today's what, February 20th? Probably March 10th, maybe something has changed with the company, right? I mean, I see these numbers for the most part. Because again, the majority of the numbers that we covered, it was for their yearly growth. Other than like the things that you need to know that's current, like what I got, like their PE ratio, your price to earnings, your price to sales, anything dealing with the current price right now, you always want to know the most updated information. Same thing with the free cash flow. So other than those right there, those all those metrics, those will change over time and everything, and you will hope that it does change for the good. So anyway, I hope that you got something out of this video, right? Again, we did the research. I will be doing more research on other companies as well, and then we will grow and grow and grow, and we'll get better, right? If you are a beginner and you like what you heard, and hey, you don't mind, doing research, and or if you want me to look up a company for you, just drop a comment. Like, write a comment. I will read them. And I would say, you know what, let's research this company right here together. So anyway, again, if you like the video, hit the like button, leave a comment, and consider subscribing to the channel. I would very much appreciate it. Again, I would be doing more videos, and it's not just videos on researching stocks and everything. I would have a different variety of different things and everything, right? But again, the foundation is researching companies. So anyway, that was Robinhood, and that was my take on Robinhood. Again, I'm not a financial expert, nor am I a financial advisor. I just like researching companies and showing you my process. Again, hit the like button, leave a comment, share the video if you want to, consider subscribing to the channel, and until next time, I'm out. Bye.